Good morning, everyone, and welcome to the European crossover webinar. And we've survived the Brexit vote. And let's go on and get started here. And we did see a very, very good recovery here in the cable. Going and step back in, and we're going and take a little bit closer look on that now, and then we'll just cover the opening morning comment news. And we came right into this 2888. We actually had some resistance here, 2850. I'd mentioned that in the chat room. I think we backed off like about 20 pips, and then we reasserted ourselves, but we came in right into this. Step back a bit here, this 2888 that we had here on the 2-hour chart. Challenge that again and kind of pull back a bit from there, but a very nice recovery here. And also another key market too, I believe. Let's see with the cash dollar index and getting back above. Obviously, we had that big move we've been talking about. I don't know why I moved this here. Back above this 95.65, and we mentioned the 96.08 there. It was confluence with the 96.05. Well, we stepped up a little bit higher. We mentioned this also, is that going into the Brexit, they may want to just keep on trying to push it. I wasn't sure how much further, and I had some additional resistance at 15, but they pushed it, and obviously the pull, the drag from the cable going lower certainly gave the dollar a little bit of an extra push. We're back below the 96 area here. Let's put this over here. And the euro itself had already taken that dip below the 114 area. I think we may, most of news, I'm thinking about it almost as bad as it can get, but I think even Amanda mentioned she had a target at 1395. So a couple of us were able to dip in right in this 1389. I wasn't sure how this whole Brexit news was going to impact the euro. So I was able to just get out with, a few nickels, and then before the vote, and then get back in, and then same thing, just only a little bit. I was really disappointed with the action we saw in euro. I thought once we got past Brexit, and you saw the cable ripping, I thought that the euro would correspondingly. I thought we might get a rip up to around 1450 or so, but it was rather a feeble recovery. So I was glad to get out with just a few pips and then let this thing drip back. And I did something with the yen too, but I was able to get out. Same thing in Asia with just a little bit, just a handful of pips. This dollar yen is still doing relatively well overall. It's still struggling. We'll get to this right here. But I don't mean struggling. I'm saying about moving lower. I've got a medium-term target of 676. In some ways, it could be a lot higher if you think about it. When we referenced here on the S&Ps, look at the S&Ps, and I had resistance on here at 2602. There was some additional one at 14, which is where we're at right now. And you can see that coming across right here. But wow, this thing has continued to stay up higher. And obviously, I guess because of earnings season, but as high as the S&P is, that I'm talking about the recovery, the dollar yen could be even higher. So I don't know if anybody had any opportunities to step in when they made those runs up here. In the 70s, you had some opportunities to scalp around until we can get these equities to turn lower and go a little bit lower. But I think eventually my medium-term target, as I mentioned, is going to be 676 down in here before they go on and find some more additional, where they go on and find some buying, and then we may see a more decent bounce from that area. But I think that's where we're going to end up going to on there. And taking a quick overview with gold. Gold's still holding up. Every time you think it's going to roll over, it just doesn't want to roll over. And here we are on the 2-hour chart. We've talked about it on the, here on the daily. Gives you a little bit better sense of where we are. And we continue to hang up here very, very well. Things still haven't turned around. I'm thinking that the same way, well, maybe not the same comparison like the dollar yen, but if the spoofs start to finally turn around, or the dollar pairs back. You think about this. The dollar has had a pretty decent rally, and look, gold's still hanging up near these highs. It just doesn't want to give it up. So if you get that dollar sliding back, it's probably going to be able to go and trigger that move above 13 and make that move closer. We were talking about 1304, but at this point, I think if you get that move here, it's probably going to take us well into the teens, actually. But we'll go and take a look at the morning bid comments. Says morning bid, Brexit softer or later? You would think that the rejection of one Brexit deal, in fact, the only deal on the table, should make the chances of a no-deal exit more likely, yet nothing in this saga is clear-cut. Goldman Sachs, for example, concludes after Theresa May's crushing defeat last night, the prospects for a no deal have actually faded further, and that we are moving towards a softer, later Brexit. The rationale is that assuming May survives tonight's confidence vote, the opposition Labour Party could push for either a second referendum or a softer version of May's deal based on a membership of a permanent customs union. Variants of the interpretation are shared by others in the city who are lending support to sterling moves this morning. Business is much less sure. It might simply be a lobbying proposition, but the Institute of Directors now believes the UK is staring down the barrel of a no deal. The European Union is expressing similar worries in public. Among the things to watch now, any further EU reaction. Michael Barnier is speaking this morning. To what extent May exactly reaches out for cross-party consensus, and whether proponents of a second referendum seek to include that option in an amendment in the new motion May is expected to put toward Monday. The Greek Parliament is on hold. Confidence vote later this evening, and Prime Minister Alexis Tsipras, who called it following the resignation of right-wing coalition partner over deal to end a decades-long dispute between Athens and Skopje over Macedonia's name. Tsipras is banking on support from smaller parties to see him through, but it's close, and there'll be an equally tight vote on ratification of Macedonia name change. And markets with the pound gyrating but breaking little ground, and the world markets eyeing the drama. The UK political impasse plays out for another day on Wednesday. The heavy parliamentary defeat for May deal overnight now leads to a confidence vote in government this evening. May is expected to survive the vote, which would reduce the risk of a snap election, but no one is any clearer on the next steps on Brexit. So far on Wednesday, senior French and German ministers have indicated there'll be no major changes in the EU's existing offer, but softness to delaying the March 29 Brexit date. EU Brexit negotiator Barnier said it was too early to assess the impact. For sterling, it's brief. Pre-vote slide on Tuesday was quickly reversed against the dollar. It remains roughly where it was against the dollar in the same time yesterday, about 28.63. Did break higher against the generally weaker euro late on Tuesday. She said it's highest since November. The broad market stance toward the pound is the worst case scenario of a no-deal Brexit or a snap election. And let's go on and it's also mentioned Chinese central bank continued to lean dovish with another big injection of liquidity into money markets on Wednesday. And Germany's GDP release on Tuesday showed a slowing economy that just skirted recession in the final year of the ECB. Mario Draghi also underscored the emerging weakness of the euro on Wednesday, and that certainly dragged the euro. He says we need to have more stimulus. So anyway, going on to the Canadian dollar, a quick whip through edged higher against a broadly stronger U.S. counterpart on Tuesday as oil prices rebounded. And the dollar rose against a basket of major currencies as data showed Germany's economy slowed in 2018, and that weighed on the euro. And on to the Aussie dollar. Marked time on Wednesday with investors relieved the latest episode of the Brexit drama had come and gone without causing convulsions in global markets. Some analysts believe Beijing could deliver 2 trillion yuan worth of cuts in taxes. That's probably helping the S&Ps, or at least help levitate it. Let's put it that way. Opposition Labour Party Jeremy Corbyn called a vote of no confidence in May's government for later on Wednesday, but the general expectation was that it would fail. The market apparently thinks that at this point, no agreement is better than some agreement because it buys time and increases the probability that the country will change its mind entirely about Brexit, says Marshall Gittler. That's the best route, but I don't discount the possibility of politicians choosing the less than optimal route. The Melbourne Institute and Westpac Bank of Consumer Confidence slid 4.7% in January amid broad-based weakness. And in New Zealand, the data showing electronic retail card spending dropped 2.3%. And lastly, in regards to, once again, the Brexit, we pretty much touched these, but it says now the market is now factoring the March Brexit deal deadline being extended. In the long run, it may boil down to two scenarios: a no deal or no Brexit at all. Dollar index against the basket of currencies was effectively unchanged at 96.01. Well, we're below that right now at 95.88. Recovery by U.S. equities and the resulting ebb and downward pressure on treasury yields will widen interest rate differentials between the U.S. and other countries. There'll be a theme in supporting the dollar this year, said Junichi Ishikawa. And lastly, we'll finish up with gold. Gold fails on the Brexit vote. Well, failed, yes, but, failed to what extent? I mean, we're still up close to these highs. Gold price on Wednesday supported by uncertainty around Brexit after lawmakers voted down Theresa May's deal to leave. British lawmakers defeated May's Brexit divorce by a crushing margin and triggering political chaos that could lead to a messy exit. We are seeing weakness in the economy in China as well as the U.S. markets, expecting that the Fed might slow interest rates in the near future. In separate appearances on Tuesday, various Fed policymakers agreed the central bank should pause further rate hikes until it's clear how much the U.S. economy would be held back by larger risks like the slowdown in growth in China and the narrow ones like the ongoing budget stalemate in Washington. Gold tends to gain on expectations of lower interest rates as they reduce the opportunity cost of holding non-yielding bullion. Gold will find support in the coming sessions, but needs the price to break above the 1,300 level before making a meaningful move. We talked about that with the gold. I was telling you is that don't be surprised. I mean, people are looking for a turn down, but my thoughts are that it's not going to be so easy. And I think that you're going to see, if they make this move down this, I think you'll see a nice bounce here. But right now, it's still holding up very well here with gold so far. So we'll see what plays out. And you think about it, the dollar already moved up above right was at 96.20s, and still we're hanging on here with the gold. So look, it's almost like gold's just waiting, biding its time until it has the opportunity to bust above that 1,300. So let's go on and move on to the euro. As far as news then, we did get the German inflation news. Came in at 0.10, pretty much in expectations. And move this back out. Okay, and they mentioned for today we do have, which we already got, until Italy November industrial orders, German data inflation. We just covered that. UK December inflation. Bank of England Carney speaks in Parliament today. You want to keep aware of that. Let's take a look here. Also, Q4 earnings in the U.S. for Goldman Sachs, Bank of America, Bank of New York Mellon, U.S. Bancorp, BlackRock, and Comerica, PNC. And we do have December retail sales, the housing index, and export-import prices. And later on, we have the Fed beige book. And also, Fed Chief Cash Carney will be speaking in New York City. So we're going to keep aware of that. Not this one, but I'm just saying aware of the overall, what we have coming up. And let me go in and find my bias chart. I restarted my computer, so I got to pull this back up. So let's move into the euro dollar. We did take that dip below 14. We're trying to work above it. I'll tell you what, we didn't, it wasn't like initially when I put on that move of things, it's 1386. That's right. Initially when I put on that, I thought we'd see, well, not ahead of the vote. I mean, I thought we'd see a quick rebound, then a dip back, then after the vote, a nice big bounce. So we've really hung around here. And let's take a look at it here on the daily. Well, there's that 1422 that we talked about, and it's going to be important for the euro in the very least, to get above 1422. That's probably not saying a whole lot for right now, but it's important that we get above that 1422. It's actually working a little bit of, at least initially, it's working a little bit of a resistance. Same thing, case can probably be made here for the 1440-ish. Good thing, and probably more importantly, is going to be this 1440, because if you look right across this comes basically right across, and also, let's move right there. I'm going to say 1445. If you look at this here, if you look at this 1445, this is important because it also takes us just about halfway past the body. So for right now, I'm looking at this 1445. It's important that they get, the way the market's trading is going to be a little bit tough, but we can, to even get beyond that, it's struggling right now with just 1422, but it's important if we can get past this 1446 on a closing basis, called 1445 on a closing basis. It's going to really help to go on and slow down the momentum of the bears. Doesn't mean we're going bullish or anything like that, but it does help slow down. It's going to be a key number to look at on the daily close, whether or not we can go on and see that. Maybe things start to go on and turn around here. Let's put it this way. If we start to see a turnaround here in the euro, the getting a close above 1445 will certainly add to further momentum. Let's take a look here. Initial resistance comes in right here, actually at 1440. 1440. Looking at the exponential moving average, you can see we're close to generating a buy signal here on the 30-minute. We've been on a sell mode. Look from here. We're close to generate. Actually, we have if you look at this real quick, we just generated this buy signal here. So you've got the momentum going that way. So at least on a short-term basis, you'd want to be trying to pick this up and moves down here to, say, 1412, but it certainly has the momentum right now going for it. Looking for support. Is going to come in right now for today. We're keeping it pretty tight. We're keeping it very, very tight here. Because really, if we break below, we're starting all over again. On this move, it's really going to be 1406. But that's, to say it's only 12 pips away. It's if you're day trading this thing and play this momentum moving higher, 1406. So this is where the real support comes in. I'm saying on a very short-term basis, but obviously we can see here, this is key. It's going to be 1393. You get below that, and that really opens the door for another move lower. Well, we do have May's no confidence vote today. I think we're still set up for a little bit of back and forth. And we look at this on the 2-hour. We came right into this 2888. See if there's something else we can find here. For right now, it's obviously this 28.88 for resistance. We almost came pretty close to this 61%, but for right now, on a short-term basis, it's going to be 28.88. Okay, and support's going to come in right there, just below this 38%. It's going to be 28.05. Actually, push it right, 28.04, 28.04 for support, just below this 38%. Well, the Aussie dollar is still maintaining this upper level here, and for good reason. The S&Ps are here, and the China, it almost continues to be a daily bit with the more stimulus added. And I saw, actually, it was on Reuters. I just saw it a little bit earlier. Let's go back to that story. They're introducing something to help smaller business. I saw it. Take a look here. I don't see it right offhand, but I saw that as I was coming in right now. And let's see. But anyway, obviously good reason for them to continue to support this Aussie dollar with the action seen in China, and also the S&Ps holding up very, very well up here. Maybe we may not see the S&Ps try to dip until we get past this until we get past earnings season. Maybe at that point we'll finally start to see this dip back. We'll see how the banks come out today. Anyway, moving on here with the Aussie dollar. We had 71.98, and we're going to stick with that. Let's go and move into the 2-hour chart. And we still have a little bit here. It's actually right there coming across. So it's going to be, actually, we've had a pretty nice little run here. It's going to be 72.19. It's actually 72.19 now on the Aussie dollar. Not that far away, but we do need to go and adjust that. And at least for right now, it's not a range. It's bullish. Hard to believe from what we saw previously. The market is beginning to look, if you look at it on a 30-minute basis, beginning to look a little bit tired here. Probably starting to see and I'm not an RSI fan, but probably starting to see where the RSI is probably in an area where it could start to roll over a little bit. They're trying to hang on up here, but they're not. Each little high is a little bit lower, and not even by much. I'm not going to say it's a lot, but I'm just saying it certainly looks like it's maybe to say it's on the precipice of a move lower, but certainly if the S&Ps finally start to weaken, we can certainly see this also dip in. But support on a very short-term basis is going to be right there, 71.48. Now, it does look here like the Kiwi is finally starting to pare back. We did see the New Zealand retail card data came in a bit weaker. This maybe will, they don't trade that closely as much as they used to, but maybe we're starting to see a little, the Kiwi maybe possibly lead a little bit. We are seeing as I mentioned, the Aussie get a little bit tired up in here. May want to keep an eye on that as throughout the day with the S&Ps. Still a little bit early, but we are starting to see this market, you can see here, falter just a bit here on this 2-hour chart. Let's pull up the resistance, 67.74. We did move beyond that, and if we're going to get a pull down here, it's going to be right here, just above this 50%. I see the 50% is right where you'd expect the market. It's going to be 67.17 on support. The market is starting to falter just a bit here from this area. It's already had a pretty good run up here against the 68.45. On a short-term basis, it's going to be right there, 68.27 on a short-term basis. Now looking at the dollar CAD, you can't look at the dollar CAD without taking a quick look here with crude, which continues to remain strong. I mean, and I say strong when you look at from the depths that it came from. Now we took a little bit of a dip, but we turned around and rebounded. This would be an area of resistance right here at the crude, 52.53. Oh, we may have just about made it there too. Look about 52.40 something. 52.47. And we're starting to roll over just a bit. It's still on a short-term basis on a buy mode, but maybe we can start to see this thing finally start to ease back just a bit. Oh, there we go on a 2-hour. That might open the road for the dollar CAD to move a little bit higher. We've already come down here and made a dip, and it's actually held up very well, just above this area on a very short-term support, 32, 36. So if we can get the crude to move, finally start to recede a bit, and that may come into play. Obviously, it's holding up. One of the things also with the China continue to provide stimulus, that's certainly a bit supportive. But if we can start to see, and that we may see that towards the end of the week or maybe beginning of next week, crude start to pare back a bit, could open the door for us to come and make a move up in here to about 33.48. That'll be the next area here. Actually be 33.60. But on a short-term basis, resistance remains 33.14. We actually gave it as much as 33.33, which is probably a little bit. We were here thinking we could push beyond that, but this will continue to stay in place. I think the reason we'd moved that too is because we didn't see on the way down, there wasn't much of a reaction. There was a pause. Let's put it that way. There wasn't a bounce. On the way up, they got only past, I think they got up to 23 or something like that before they rotated lower. So yeah, we'll keep this. We're going to go on and rotate this a little bit lower, because my point is that if we can get past 33.14, then that's really going to start to turn the momentum around. Yeah, there'll be some additional resistance coming in right there, as we mentioned, that 33.33, but it's going to be important if they can get above 33.14, especially on a 2-hour close. That'll open the door for a further challenge, and that in itself could take us up to 33.60. So it's going to be 33.14. And for support, and we came down there and touched that area there, which is going to be 32.28. And looking here on the Swissy, we had 98.38. We had a pretty good run here with the dollar pushing up well above 96. It certainly allowed for this market to get back above and stay above here. This bias pivot, which they tested again, 98.02. Resistance is right there, 99.02. And on a short-term basis, support's going to come in right there, 98.46. That'll be just below the 23%. Is going and paired back. I mean, we're below 96, we're at 95.90, but nonetheless, we were able to recapture that 95.65, and that was huge. And obviously, we got the momentum going that direction. Then once we were able to do that, we're going to move into the dollar yen. We talked about this earlier in the show, the 676, and this is on the daily right here, and that's where I'm looking for a medium-term target. We're still hanging about here with the dollar yen, obviously to a certain extent for good reason, because look at the S&Ps here, still motoring higher. Now we got some good daily resistance here at 26.32. When we look on the 2 hour, I was looking at 26.02 and then 14, and we just made it to the 14, kind of edging back a bit, but certainly they've really allowed this thing to go on and move higher. And with that, the dollar yen, for lack of a better word, is levitating at this area, although I think eventually we'll make it to 676. I know Morgan Stanley, they had put out a piece, it was yesterday, early in the morning, they're looking for a move back to the December lows in the equity markets. We'll see whether or not that plays. Also, I saw a story that the junk bond market has just gone basically to a standstill now. So the idea is, though, is that we're, when you look at the junk bond market, sometimes you see that eventually with concerns about the economy, you'll see that really start to slow down, or hopefully not freeze up, but you'll start to see that slow down way before you start to see almost like the canary in the coal mine. And I was reading that stories that's practically slowed down to a halt because people are looking for a pretty good slowdown. Well, eventually that may translate, which it already has, with the move lower in equity, but we're thinking that we'll make potentially another move lower. Now, will we go to those lows again? That only time will tell. But once again, this S&P has really had a pretty rich move back. One of the things that's aided and abetted that has been this ongoing China stimulus, almost a daily thing, as we were noting. But how long will that last? Also, you kind of wonder how long with this government shutdown. One of the things that had been a concern, I think it was trying to think of which rating agency it was. I believe it was Fitch, which says the bigger concern now is going to be the twin deficits. This is just going to continue to linger, and you kind of wonder how long will this continue. I mean, I guess the dollar at this point is essentially the less dirty shirt in the hamper. And there has been a shortage of dollars. I know that we talked about that. I think it's Zimbabwe. Not that that's a big player, but they're abandoning their currency because he says it's too tough to get dollars. Wonder how much further this is going to play out before we start to see a move in the dollar. But another thing is gold's still holding up relatively well. Anyway, that being said, let's get back here to the dollar yen. So we're just above this 855 here. And we're just holding here. And I guess if we were to see some great bank earnings, which I don't think we would, but we may, they'll try and push hard. Right now, the resistance is going to be right there, which is 871. I'm going to take a look at it on this 30-minute basis. Yeah, right there, coming across. Trying to see if I see anything here that I can, for further upside. It just seems, as I mentioned, like as if they're treading water here. I haven't taken out this body, but even then you've got here and then here. So just the 871, and on a short-term basis, support comes in right there. 832 on a short-term basis. Still expecting to move lower here, but looking at the bigger picture overall, I think these moves up against this 870 are very nice areas to just scalp short until we can get this break lower momentum, which I think we eventually will. But in the meantime, that's one way to look at it, is every time they make that move, dipping back, and obviously the big level would be that 927 that we've referenced here on the daily. But they're certainly holding the market hostage for now. Well, looking here at the cash dollar index, they did get that move above 96. We had that target 96.05, 96.08. Well, they certainly did make that, and a little bit further here. It looks like they made it here. And I'm not even a trend line guy. I had this drawn from before, and they made it right there. But this was some resistance right there. You see that? So just about right here. The key thing when you look at it overall is we were able to get back above this 95.65. We talked about this from not the last week, but the prior week for that dip, and then this rally back up. We've said it multiple times, the rally back up on what we thought would be lighter volume and open the door for us to move lower, which we did, and that allowed us to break. and I thought, okay, well, any moves back to 95.65 or a sell. Well, they rallied back and the market stalled and we held, but then as we started out, the week, then we started to push up, and sure enough, that opened the door for us to then, move higher, and certainly move higher. They did. They were just hanging around here. Obviously, we thought, well, there's a good chance the dollar can move higher because we thought, there's going to be the concern with cable and how far would the dollar go on and push as the news went and came out. Well, they thought it was going to be anticlimactic, and obviously, to a certain extent, that was because we saw a rally back in cable. But leading up to that, we certainly saw the dollar break above. And the key thing is, although it's below 96, it's still holding up relatively well here. So resistance, I'm going to the 2-hour chart. Here's that 96.08 we talked about. But they essentially blew past it now on the return back. They haven't been able to get back above it. We're going to consider this 96.08 almost like a trigger, because if they were to make a move above that, that allows them to try and go back to challenging these highs. Obviously, these would come in with probably the euro going below 114. So we're going to put 96.08. You can see that was our resistance from yesterday. And for support, well, it's pretty key. It's at 95.65 again. There's that key area where the market came back, and we're looking here on the daily. That's going to be our support. You can actually make the case it could be just a little bit lower, which would be 95.57. But really, any moves back to 65, this is where you're going to see the market try and hold here. So we'll go with 95.65. That is that key level. But right now it seems to be biding its time a bit, but we're losing a little bit of momentum on a very, very short-term basis. You can see here. Let's see how we close this next 2-hour bar. See if it engulfs this one right here. That would actually take out this whole area here. If we can get a close below 95.90, would open the door for us to go on and push down a little bit higher, but also open the door for the euro to correspondingly move higher. We're into that area 14.13. We talked about 14.06 on a very short-term basis is going to be support for the euro, but the key area obviously is at 13.93. Here's another market that is currently treading water also, and actually treading water in a positive sense, because you think about, look where the dollars come. We defended that 95.65, went away from there and pushed higher, got above 96, made it to 96.20, and look at this gold, still holding like a rock. And that's on top of the S&Ps with a pretty good rally, and gold just simply doesn't want to pull back. And one of the things that we've stressed over the last couple of days, and more so yesterday, I'm saying, if you're looking for a move lower, and we talked about even a couple of days ago, eventually maybe they could move, we're talking about if they were to break lower, it could come to 57 and there'd be all kinds of demand, I thought, at 12.48 if we were to see that. But yesterday, I'm saying is I just don't see it pulling a whole lot. I mean, I think if we do finally get a break and then we'll trigger some stops, we'll probably see a good bounce off this 1267, probably take us back to 1280 if that plays out. And then on the pullback, I think there'll be all kinds of buying in the mid-50s. The best you could even hope for if it were to rotate lower would be in the 1254, 52-ish. But for right now, that just doesn't seem to be in the cards because we've had this pretty good rally here in the cash dollar index, and it's not denting this gold market at all. You've seen a good rally in the S&Ps. It's not denting this gold market at all. One of the things that people may eventually want to hang their hat on is that remember, it's almost been a daily occurrence, all this Chinese stimulus that we've been seeing. They've been adding more and more and more liquidity. They might feel that this is, I think you're going to see that story eventually come out, is that this whole stimulus that's going to add for a lot of support for gold. And of course, like I said, if the S&Ps do eventually turn low, I think we could see a pretty good, nice run up here in the gold market. So that being said, we did have a little bit of, had hoping this to be even a little bit lower here. Well, we've held up very, very well here in the gold market. Let's come back in here. And when I restarted my system, that is not the same data from yesterday, because I know we didn't have it at 1273. I think we had it 1284.86. So still, once again, we'll keep it here, which is, I think we had that from yesterday, which is 1286. And I restarted my computer. I think it just loaded up the older data because this is from the days before. So it's 1286. And I think that's exactly what we had yesterday, 86. And resistance on a short-term basis is right there, 1293. We'll see if we can jump above that. And looking at the bonds, I remember we had our support there at 44.31. Let's take a look here. Well, the 38% comes in at 44.04. This is some decent demand right in here. We'll go with 44.24. Obviously, if the S&Ps push even further, they'll probably allow this to pull down further, but we'll look for 44.24. Resistance comes in right there at 45.23. Boy, we've really given up the ghost here on the bonds, which look like they really wanted to power up. Or that they were saying is, when we covered that yesterday, is that we could see right after the Brexit them give up those gains as the market wasn't sure whether they wanted to see more safety. But as I mentioned, the Brexit vote was somewhat anticlimactic in the sense that we saw that rally back. Resistance is going to come there at 64.31, and even that might be a bit rich. Not seeing where there's going to be a big concern unless we see equity start to roll over. So we're going to go right there at 64.27 on the bunds. And we know this is all because we were well above the 64 at the time. So when I reloaded the system, it had brought that all data up. So that's not the levels from yesterday. Support. Is going to come in right there. That's also the 38%, which is 63.96. And if we're starting to see some further liquidation, yeah, they'll definitely go and make a push for that. So we're going to go with 63.96 for support. And let's go and move on to the DAX. Well, the DAX has begun to wane a bit here, unlike the S&Ps. Resistance, short-term basis comes in right there at 918. That was actually support right there. Came right into that line and bounced off. We're going to have to go down here to 817. We're just back and forth in it for right now, and it's still a relatively tight range. So it's going to be 817 on the DAX. You're pairing back here, and we talked about this earlier. On a very short-term basis, because you see here where the momentum is moved higher here, it'd be important for them to defend this area right there at 1406. Now, our actual bias chart support comes in at 1393 because that will trigger a move lower. But this is the area that they would need to defend is 1406. Okay, well, we've got the bias chart. I'll get that posted into the chat room. And thanks for joining us here on the European Crossover webinar.